With the signing of the Australia-China FTA, it is no surprise that foreign investment into Australia is being put under the microscope. My next guest is Andrew Bragg, Director of Policy at the Financial Services Council, who's going to be discussing the Council's cross-border flows report. Andrew, thank you very much for taking the time to chat with us today. Much appreciated.
Hi, Natalie.
Okay, so firstly, can you walk us through the headlines, as it were, for the cross-borders report?
Certainly. So the first big finding is that over the past 4 years, foreign flows into Australian managed investment trusts have doubled from $20 billion to $40 billion. That's a significant growth at a time of quite significant global turmoil in financial markets, so that's a good sign. The second big finding is that of that $40 billion that are in Australian managed investment trusts today, 33% of that comes from Japan, so one of our largest trading partners. Now that we have set the ink on a free trade agreement between Australia and Japan, we'd be hopeful that even more capital will flow from Japan into our managers. It's a very good endorsement of the capability of Australian fund managers that not only have flows doubled, but the very highly regarded Japanese market have sought to entrust us with some of their wealth as well.
With foreign investment into Australian MITs having doubled over this study period, are there preferred sectors that you're noting?
Look, the survey shows that there's a very broad range of assets which are being invested into by foreign investors. So one, we see a broad range of different type of investors. So we see pension funds, we see other fund managers, and we see sovereign wealth funds, family offices and whatnot. And we see that they're looking to purchase and get exposure to a broad range of assets. So a lot of the money is rerouted out of Australia and invested back into the Asian region. We've seen domestic equities, infrastructure, property, fixed income. So basically the full range of assets which are available have been chosen. So people often think of the Australian market as a bit of a one-trick pony. We're famous for, at least domestically, for equities, but it shows that our managers have skills well beyond buying the big four banks and Telstra and the miners.
Now, we touched upon already Japan as a major investor into Australia. Given recent weak GDP figures, is this something that we should be concerned about, perhaps?
Well, Japan's been one of our top trading partners going back to the 50s, and in the late 50s, the government signed a commerce agreement, which was only 12 or 13 years after the end of the Second World War. So we've had a very long association from an economic perspective with Japan. So when Japan sneezes, we often find that we need an extra blanket to wear, as it were. So weaker GDP figures is never going to be a good thing for Australia, but I think it won't diminish the desire for the very large Japanese funds management industry to get money out of Japan. So what we've seen in recent weeks is the Japanese super fund, which is the government fund, the biggest pension fund in the world at about $2 trillion, has indicated a very strong desire to get money out of Japan. So that will create more opportunities for Australian managers because we manage assets that they want to get exposure to. So I think the GDP figure at a macro level will always have an impact on Australian trade with Japan as a major trading partner. But in terms of the funds management industry, I would say that the more money that comes out of Japan, the more likelihood there is that we'll manage a lot of that.
The report also touches on a greater need for Australian competitiveness. Can you expand on this sector?
Well, we have a wonderful tendency of creating regulations which only we understand. So it actually hobbles our ability to sell services beyond our shores. So our tax regime and our trust regime, no one understands. Even people here don't understand it. So per capita, we have the most tax professionals in the world. So that's a good indication that if we don't understand our own system and we have to pay people so much money to explain it to us, then how will other people understand it? But when we talk about tax and trust structures and investment vehicles, as an export, it's really important that people do understand them. So we have not only a range of investment vehicles which are incomprehensible, we also have uncompetitive tax rates. So as we move towards the commencement of the Asian Region Funds Passport and the bedding down of these free trade agreements over the next 2 to 3 years, it's imperative that the government puts in place competitive tax settings.
Andrew, thank you very much for your time today.
Thanks, Natalie. Cheers.